This is Dan Max at eXp Realty, aka the Trading Agent, and this is your live daily market recap for Tuesday, October 18th, 2022. Hopefully you're doing well. Surviving as we expected. The market is looking to squeeze the bears. There are a lot of circumstances that we reviewed over the last, 10 days that led to this. We're going to review them again. We're going to show you guys why the evidence matters and just try to stay on top of what's going on, because I think a lot of people think the world was going to end and the market was going to dump. But the problem is the market makers weren't going to allow that to happen at this point with the amount of puts outstanding, the huge ES shorts, and want to show you folks a few charts of things that I've been paying attention to. It's on my Twitter account if you're not following. You can see it's right there. That's what it looks like. It's interesting that NDX put call ratio, I don't remember a higher level in the last, obviously you can see not anytime recently. So, that's just something I'm paying attention to. There's way too many puts out there. Talked about this, if the market's out of position, 2008 and then the Great Depression had some of the biggest counter one-day rallies in the markets. Now, again, I don't know if we'll have one of those kind of situations, but I'm not surprised if the market does that kind of rally, 10%. Expectations are pretty junky. And then this is the last thing that I was trying to put in perspective for some folks. Look at the number of cash percentage level. 6% plus is usually a high level of cash for investors. Now, it sounds kind of crazy. It's not that high when you think about the perspective of it. But this has tended to lead to rallies, even at worst near term, in these oversold positions. Again, the evidence was pointing the picture. The market makers are not going to give the bears an easy W, just like we talked about the VIX repeating pattern of 2008. Let me see if I have it on here. Again, love the super cycle that's coming up with commodities. Let me see if I can find it. I don't have it on here at the moment. Maybe it's on the Discord. No, there's too much stuff on the Discord room. But maybe I'll be able to find it. I apologize. I should have done that earlier. Mic check, though. People are listening. If they can confirm, we're good to go. There's that cash level. Talked about that. But, yeah, anyway, whatever. Just another chart, another interesting fact to pay attention to. Let's see if I can find it. Come on. It's got to be here somewhere. Oh, well. All right. Took on some oil trades today. Kept on commodity stuff. Again, just not really. It's just amazing to me, sentiment, how out of whack it gets, and then the market. Here we go. This was talking about the VIX in 2008 to 2022. We had this pullback before the big smash. What do we need to go higher? Commodities. Talked about it. Let's get into the charts. Let's get into the goods. Bitcoin, I've said, it's not really bearish, not really bullish. We'll see. I'm in the opinion of just like gold, certain miners, certain stocks. I have no desire of going long them or shorting them. They're just dead money. So at this point with Bitcoin, if you're bullish, be careful. If you're bearish, be careful. Nat gas, talked about it. Once it broke the mid sixes, you had to go. Some people capitulated today. I don't know what you're waiting for. Maybe you're praying. I don't know. I'm not a big prayer guy when it comes to the market. I feel like if there was a higher being out there, he's got other prayers to answer than us gamblers. Oil. Talked about it, buying it today. I said, watch this 82, 83 area. Wouldn't be surprised if there's a wick. They're talking about releasing more oil from the SPR, just as OPEC is about to cut more. This is a dangerous game of chicken. Thank you, Shannon, for confirming. I hear you. Yeah. Ugly situation to be in. I don't think it leads to oil smashing. If anything, watch the levels. Keep it very simple. I've said this a billion times. If the feds are going to get tighter and raise rates more and you want to see a bigger market smash later, you need to see commodities rise. Potentially left shoulder, right shoulder, head. That's how I think of it. Let's get into the charts. I apologize. I had it all opened up and then I closed it all. Is what it is. Oh, hey there. Oh, hey, pups. Good dog. Miss that guy a lot. The dollar below the 20-day. We said lower highs, not bearish. Talked about this last week. If the dollar is going to peel below the 20-day, it seems the 50-day is support. I still wouldn't be surprised if you tested the, I don't know, low 20s. Just keep that in mind. I know a lot of people have this like big opinion on some sort of dollar smash or dollar whatever. Again, we said this 1,000 times. The up move will be take your breath away how high the dollar can go when it's at the top. I just don't think we're there yet. Bonds said this. The market could be okay if stabilized. We talked about what? The monthly? And the monthly said, yeah, you're probably there. Some people are like, oh, should I take a stab at it? I see it. I see you. I don't know. I don't think bonds are ready yet, but I wouldn't be surprised if they bounce, but I also wouldn't be surprised if they just went nowhere. The VIX, oh man, if we can get this thing under 30, sayonara, because the 20-day, and then first support would be at 28, which it might cut through like butter. Thinking maybe the moving average cross or somehow fill the gap. That would be nuts, but that would not be surprising to me because we know the market plays games. I mean, you got to give bears a reason to capitulate, and what's the best advertisement for higher prices? It's always higher prices. Get the market out of position, get it rallying, get all that cash that's sitting on the sidelines, get all those puts, get all the ES futures, get everything unwound, and then you know how it rolls. SPY. Gap up today, added on the 20-day. People are like, you're crazy, man. I'm like, I don't think this is a one-day event. You got over the 20-day. This is a bear trap. Take notes. When you have bear traps, they don't just last one day. Even this up here, this was a nice bear trap, rallied up, right? I still think we're in a position where, I've said this many times, I think we're in this May kind of counter trend rally because you drop 80 points, you pop. Here's that first leg. We should definitely go higher than this leg here at 380. That's why I keep saying I think 390 would make total sense, and then maybe a chop top, worst case scenario. But you never know. I mean, there's a lot of cash on the sidelines, a lot of shorts. If you think it could be vicious down here at the lows, don't be surprised if it's vicious at the highs. Remember, bear markets are meant to take the most amount of money from the most amount of people even quicker than a regular market is. So at this point, you got to be very careful. Raise your stops. Now, again, don't be like stupid bullish. When I say stupid bullish, just like you can't be wrong kind of thing. Be defensive. Raise your stops. Take profits, whatever you need to do. If you're shorter time frames, then you definitely need to be trading quickly. I still think we get there. When we get there, it might be next week. Could be the end of this week. But remember, ton of puts outstanding going into OPEX. Especially there's a ton of NASDAQ puts. And not surprised today. Got over 20-day, pulled back. If you're watching and paying attention to Discord room, said watch the 269, 270 level. Hey, look at that. Blind squirrel finds a nut. As much as I have not always, recently haven't been perfect by any means. People are like, oh, you've been wrong lately, so I'm just going to stop listening to you. Okay, well, that's your point. You can do whatever you want. Typically, we go with the probabilities. Just sometimes the probabilities aren't in our favor. I still think 284 up to maybe all these moving averages. Keep it simple. IWM. How did you know the bear market wasn't coming? Going to continue? Because the IWM doesn't confirm it. We talked about the IWM always leading. Look at the action. It's not at the lows. I mean, it's at the lows, but not breaking the lows. Not breaking it. Nice gap over the 20-day. Gets up into the first point of control. Backs off. Not surprised. High and tight ain't bearish. Let's see what happens. Gold, just leave this crap alone. I mean, I don't know, not crap, but market's rallying and this thing's dead. Again, I think gold, the best time to buy will probably be in December when you have tax loss selling, capitulation. Silver, same thing. I mean, everybody's like, oh, but now it should rally. Well, the dollar's dropping and this stuff isn't really acting that good. Just take it for what it is. Leave it alone. You're expecting some all of a sudden overnight reset. Well, Santa Claus hopefully will bring you your toys at some point, and I'm thinking it's more towards Christmas. GDXJ, again, I don't know why anyone would want to trade this stuff. It just looks like, it looks like tech, dead tech. Just leave it alone. GDXJ, remember when there is a miner, when there is a sector you want to buy, it's going to be miners. Check out the monthly juniors. Been absolutely slaughtered. I mean, I'd like the 26 level, but I wouldn't be surprised by 20. I mean, at this point, if you were buying this stuff, say your Hail Marys, pray. I just don't like to pray. I like to assume things are going to happen. It's going to move with the market. AG, I mean, I don't know why anyone would want to play this stock, but I guess you can. I mean, it's just looks like a big dead chop zone. Good luck. I mean, maybe it breaks out. Maybe I'll be wearing pie on my face, cream pie, for being wrong. It happens. AEM, we like this one when the market bottoms. Y'all see this. Y'all see this. Y'all see this. So, I mean, at this point, I think I would potentially just be in this mindset of no touch. I like it. Looks like the best. Like gold miner to me, that's above average size. I can't remember if their market cap is 10 billion or not. I'm pretty sure it is. Looks better. Volume. Newmont, on the other hand, don't like it, but you have to use it to confirm. Had volume and just can't make in lower lows. This thing could get absolutely slaughtered if the market gets smoked later and the VIX gets into the 50, 60, 70 level. Yeah. So at this point, yeah. Here you go. Next one. PAAS. I mean, it's just, people are like, oh, you're going to miss the big move. And I'm like, no, I won't. It won't be that big until it is. And then when it is, we'll get on it. I promise. We'll get there. AMD. I mean, they guide down. It at channel lows. It should technically bounce. We'll see if it does. I am under the belief that tech will lag because the news is constantly bad, but that doesn't necessarily mean it can't rally. Again, we talked about the NDX puts, all that stuff. I would look for the names that are acting better. When I say acting better, you will see certain ones look way better than other ones. And the semiconductors, personally, again, like NVIDIA, I mean, I think a chairman sold $10 million worth of shares yesterday at 120 or whatever last week. Channel lows, but this thing just looks like it's dead. But I mean, again, sometimes you got to be careful trying to short dead stocks, as Livermore would say, like, don't short a boring market. I mean, it could have a little pop in it. I personally, no interest in these names. SMH, people are like, oh, look at the Soxel. I'm telling you, when a leverage ETF gets under 10, they're trash. It needs a reverse split. Yeah, I mean, you got the signal. That should be the signal to go higher. Maybe 200, maybe one. I don't know. I struggle with these because at this point I'm like, I just feel like there's just better stuff. Such a glutton chips. And I talk about it. Once chips die, and people don't realize, once literally chips die, they become a commodity. Like, you're going to see they're going to trade just like what? Just like commodities did, and they go nowhere for a long period of time. And when I say long period of time, study your past. We'll get into it. Maybe I'll take a look at it, and we'll talk about it. Adobe came out after hours, guided the same as they've always had. And let's look at the 10-minute. Yeah, 302 after hours, back at the AM highs. At this point, I mean, I talked about it. You could have sold puts on this action when the IB was huge, because this thing has taken an absolute bath. 700 to 292. I mean, it's just like we're going to talk about like Netflix. It looks like it feels like it's going to pop. Be safe out there. Be smart. Apple, bad news comes out today, essentially saying their iPhone 14 sales are going to miss. But they've been talking about missing sales for weeks, not if months. Which, again, I'm not really long-term bullish, but this is making higher lows than some of those other names. And look what happens. It's rallying back stronger. If you want to trade tech, I think you trade Apple. I mean, as one of your potentials, like, put it on your list. Apple looks better. Where could it get? 150, 155? I don't know. I mean, you tell me. When the market gets popping and gets stupid, levels don't sometimes matter. Sometimes maybe it's just the 200-day. Maybe it's just an exhaustion up move. I wouldn't short this stuff. Amazon, holding up better, right? Got near the range lows, held up better, pops over the 20-day. Doesn't look terrible. CRM, this one got slaughtered. And then it popped back up today. I think, did they have earnings? I can't remember. Something went on with them. I think maybe just on Adobe stuff. This one's tough. It is a toughie. But you're over the 20-day. I personally just don't like my risk reward here. Like, are we going to chase it at 150, hoping it gets to 160? I don't know. I think you can find better trades out there. Googmeister, Nancy Pelosi exercised her options. Nice gap up over the 20-day. This one, tough. Tough. I mean, you could argue Wu-Tang, W bottom. But is it this kind of bottom? Because this is going to drive you crazy. Meta said leave this stock alone for months. It's at the channel lows, popped up the 20-day. I mean, I don't know. Your guess is good as mine. I worry about names that have potential for what? Negative news and potential headlines, because they're going to get slapped again. They're just going to get slapped. Microsoft, remember, if the dollar's going down, they like that. I don't know. Wait for earnings. Potentially. NDAQ. Man, I'm slapping myself. Lupus put a bullet in my head for this one. Talked about shorting up here. Didn't take the bait. Gaps down. And now it's at channel lows. I'm hoping for the 60s. Remember, this is like the Coinbase of the NASDAQ. Because when the volume comes out of the NASDAQ and gets into, we get that commodity bull run, ain't nobody buying any NASDAQ stocks. Their volumes on their exchanges are going to go. I don't know if that sound was confirmed as not, but sounds of poo-poo. Absolute poo-poo. Now, when you look at MicroStrategy, speaking of holding up, takes a bath, 900, whatever it got up to. That's crazy. No, that was the second high, if I remember right. Correct me? Yeah, yes. 1,300. I mean, I think it's a trading stock. Bitcoin's bouncing, it's bouncing. We talked about, I mean, you could argue left shoulder, head, right shoulder. Be careful. I mean, I just wouldn't short this stuff. Netflix took a little scalp after the close. At the close, said directly in the Discord room, I said, I like stocks that are not breaking out going into earnings. They get up there and they back off, kill all the puts and calls. And I said, if you're going to take the market higher, the names like this need a rally. It comes from what? 690, 701. It's basing. We talked about this thing's been acting strong. Now, again, whether you like Netflix or not, who gives a crap? We're talking about making money. Making money. What happened? You gapped up, bought 50 shares just on a whim. I was like, you know what? I mean, if Apple can go up on bad news, then why can't this go up on any news? I mean, and so it got, again, I mean, let me look at the numbers. These guys, they beat by 93 cents, beat on rev, paid net as if compared to prior gains of 1 million, guides Q4 below consensus, res below consensus, expect paid net ads. All right, so they under promise, over delivered. Probably for the fourth quarter. Finally, and again, the market might like this. When companies come out and guide down after beating, they're going to go, okay, they're throwing out like the worst case scenario. Whereas we know, I personally think things will get worse if the feds keep ratcheting up rates. Cutting Netflix out of your budget seems very logical if you really needed money. I mean, how much of their programming is really that great? Dahmer, whatever the serial killer Dahmer video is doing better than Prime's Lord of the Rings series, which I like, and HBO's not Lord of the Rings, what's the Game of Thrones prequel, which I think they're both interesting to me. They're all first seasons building. But yeah, I mean, 200-day. I'm telling you, if the market rallies, this thing could rally to 300 plus. Again, names that look better. Roblox got some good information, talking about some of their information. They had some good news. I said, not surprised. Roblox is picking up as you go back into the school year, and the school year kids are out being dragged around the state, country, overseas, wherever, to the grandparents' house. Now they're back in school, and after school, they're all hanging out playing Roblox. I've noticed that from every kid that I have friends with, or every kid that I know that I am hanging out with their parents as friends. I see this. I'm not hanging out with kids. Apologize. But you get what I'm saying here. Like, look at this action. There's your May low, June lows. Here's your base. Here you go. Could it get right back into the 50s? Mm-hmm. It could. Absolutely. And I've said this one a lot. I don't know for sure, but I suspect they're a takeout target. I don't know who's going to take them out, but somebody's going to take them out. Tesla. Somebody said they're going to short this yesterday, and I was like, all right, I wouldn't. I mean, it's holding the lows. You had earnings coming out. on the close, I think, tomorrow. Yep. Holding the lows. I mean, I'm pretty sure their numbers are going to come in fine. Maybe it's the fourth quarter numbers that I think are going to get bad. I don't think the economy's like, again, technically recession, yes. End of the world recession, no. That's the problem here with this 30% down in the market. I could see it going either way at this point. But I would rather see it pop first to trap more people, because then you get the absolute wipeout. Closed all my Tesla Q. I don't have a good feeling about it. Keep in mind, this thing came from what? 413 down to 200. Feels due to bounce. Any questions about tech before I move on? I just, again, I'd lay off the laggards. Lay off the laggards. Said it over and over. Try to find the ones that look better. Which ones look better? The ones not below their May, June highs or lows. All right, no questions. Moving right along. All right, commodities. My favorite sector. My favorite, letter X. Talked about, I mean, I think we're in the birthing stage of a long-term bull market, but we need the wipeout in the the whole market capitulation. VIX 50 plus, minimum 50 plus. I think these names over the 20-day, I've said it, I think it probably gets up in their low 21, 22s. Okay. Nucor, be careful. They've got, what, earnings? When is that? Thursday morning. They guided down, but do they pull the same kind of crap that Adobe pulls, right? Like, they guided down, I think, here. Notice how we're right back up there. I said this, even at this double, I said, watch up for the pop up to the 120s, mid 120s. Not a bad trade if you took it. One or two people DM'd me and said, nice, very nice. W, yeah, Commodities, I like them. We like them. You like them? I like them. We like them. VALE. Again, I struggle with VALE because I know it has emerging market exposure. This action to me just screams leave it alone, but it could pop. I'm in the longer term time frame of just wait for the bottom. CCJ, vertically integrated, makes this thing a lot more interesting to me. Said yesterday, if it could get over and close over 2264, it would be bullish. Today's action, I don't know about y'all, but it looks bullish. Gapped over. Closed over. I mean, near term, maybe it fills the gap. I mean, we like uranium long term, but I just tell them, you got to be careful. Arrow, some people were like, oh, it's going higher. Again, I don't trust these cheaper stocks unless they got some sort of catalyst. But at this point, I mean, this is tough. You clearly see the point of control around the mid 11s. Anything other than that, I probably just, I don't know. Just keep it simple. I don't know. I've just got this mindset where I'll fund a modest and above average retirement at worst. Okay, somebody retired millennial. Somebody's probably chirping me about not buying paper gold or buying gold. I'm like, please don't buy paper gold. Yeah. This is tough. I mean, it's been leading, so I would anticipate the first bounce. But again, it's choppy. Watch 1150. Very, very important. All right, our favorite ag names. Mississippi's supposedly drying up. They can't get their potash down the river. Yeah, I don't know. I don't know about that. Yeah, I'm with you, Bang for Guy. I don't think there's better R&R. We talk about these names, so this looks like a bull market, right? I like these names because A, they're going to give you a lot of information about the market out there. B, big down, left shoulder, right shoulder, rallying back. Talked about need to get over the 50-day, closed around the 20-day. Not ideal, but we'll see. I mean, again, if the market starts popping up again, I think these names will be. I mean, I would not be surprised to see this thing up $10 at some point. Mosaic acted pretty well. Got down to the range lows, gapped up today, and held up. Okay. Again, I like this stuff because to me, safety. Safety. I don't really see much bad news out there. NTR talked about it. If you could buy it, which we did, around 80. I mean, didn't get the actual lows. I mean, sorry. But here you go. I mean, I think that's a pretty safe point. Would you not? I mean, praying for this later, but not there yet. Again, these are the sectors I'm hanging out in. Do what you got to do. Physical demand at record levels, low demand for paper and gold. Yeah, of course, Mikey. Dude, I totally agree. I mean, I am part of this physical demand quandary and problem for the overall markets. I mean, I'm trying to buy as much silver and gold as I can at discounted prices, but I don't want to pay the high premiums. Went to a coin show this weekend. I mean, it was dead. The Denver coin, dead. Nobody's interested in this stuff when it comes to like going to coin shows and paying and buying like Mercury coins and crappy old coins. No one wants that stuff. It's just trash. I like the newer stuff, the newer, better looking stuff with Queen Elizabeth on it too, because I think that's going to hold value because she's passed away, unfortunately. All right, back to the stocks. I bought some. I like it down here. We'll see what happens. I mean, it's very binary. The best thing about sometimes trading stocks that you like and you think will pop, because again, this ag issue is not going away. We've got food issues everywhere. Farmers situations. I mean, whatever you want to call it. Oh, there's too much methane gas. I just let some out myself, probably. At this point, watch the levels. I mean, you try to get in at lows, and if they pop, great. And if they don't, you're gone. Maybe tech has the best risk reward, but man, it just seems very sketchy. Very, very sketchy. All right, now we roll through that. Let me pop up an XBI real quick, because things that aren't bearish. Like, right? You know, we talked about taking out the lows, methane release. No. It just doesn't look bearish, though. You know what I mean? If you look at this, man, I don't know if this is the arrow. I mean, you're making higher lows. I mean, it's kind of like this pennant formation. Does it break out? Maybe, but I would think at worst, if it got up in the mid-90s, it's going to find sellers. XLF, I've said this, and I'll say it all the time. Look at the action yesterday, Monday. Look at the action Friday. I was like, this isn't bearish. This isn't bearish. Like, look at financials. The financials are holding up, which again, was Credit Suisse not like the uh-oh moment? Well, guess what? If financials are holding up, and again, maybe it's just temporary, like, market ain't going to go lower, y'all. Look at this gap up. Still closed over the point of control here. That's interesting. Keep an eye on it. Eat bugs, Dan. No meat. Yeah. Everybody eat bugs. Bill Gates is going to own all the farmland. He's going to have control of the food supply. And everybody else just eat dirt and bugs. Morgan Stanley, I mean, I don't know what to say. That there was their earnings on Friday. Retest. I mean, it feels like I'm looking at CF and like ag names and replay. Higher lows, holding up okay. Again, if you go look at the monthly, man, I almost sound like I'm making an argument for bullishness. I mean, it's holding up from the 2007 lows. I don't like financials long term, but it makes sense that people are getting in them, because if they lay off all these workers, their mortgage business slows down, but there's spreads. I mean, they're paying nothing in savings. I mean, think about who's here remembers when you could get 6-7% in your savings account. Now, good luck with that. JP Morgan, this piece of junk, I was like, this is not bullish or bearish. I'm like, things that, again, they have no buyback, and this thing is screaming higher. Jamie Dimon says the market's going to correct another 20%, and this thing just turns right around. Buddy pass, trap. You make a slightly lower, zing-a-bow. Then on earnings, it was like everyone's going to fail. And it's like, look at this, just keeps tracking higher. Things that aren't bearish, y'all. Now, again, there will be a time to put the shorts back on, where you will put your pants on, your shorts on, whatever. But I don't want to be early. Earnings can be seasonally bullish. I talked about there might be a 10-11% move up in the market. Don't get caught. First Solar, you were like, oh, you should have just held onto the short. Well, it's really hard to short the market as you think it's going higher. Now this thing is lagging. Cool. Interesting action today. I'm praying for, I'll be watching 130s, 137, 140. Tan got roasted for a little while. Looked below and failed, rallying back. We'll see. ENPH, people are like, oh, you can't short this. I'm like, well, we talked about shorting it up here. And he talked about any pop, and then again, some other people did. Congrats. Always, never jelly. Never jelly. Now it's holding the 100-day. Tempted the gap. We'll see what happens. Now again, earnings, who knows? Look at this piece of junk, SEDG. Pray for a pop. Pray for a pop. And when I say pop, not like a soda. I'm not talking about a soda. I'm talking about, why? No, I don't want the horizontal. Let's go to the default. Thank you. Or sorry, the arrow. We want this. Like, pray for a pop. Show me 260s. Show me. Tell me you see that. Let's do a short. All right, let's end it on oil and gas again. We started with the futures. Put on a trade today on USO at 868. Let me break down the trade. Let me pull up the 10-minute because I think, again, the first entry I got popped off. It happens. Absolutely happens, and then got back in. If I remember right, what candle was it? Tried to get in on this candle, on this wick, and then it came back and I got stopped out. And then just said, you know what? Smallest entry, that's fine. Now, if it holds, I'm adding larger. We did. It's pretty easy. I know it's below the 20-day, but again, look at the futures. Don't really chart the USO and UNG with perfection. When in doubt, futures. Not surprised it pulls back. If you are going to believe in a bear market, absolute reaming of bulls at some point, you need oil and gas to go higher. You need to see oil and gas go higher because then the feds will accelerate the rate hikes. More rate hikes, more bearishness. Because again, I think the feds are going off a rail here. The problem is you can't raise rates to somehow produce more oil. Like this is, it's like literally the blind leading the blind. You want to get oil down, just increase domestic, supply in like 3 minutes by opening the spigots of available oil and gas that is being reserved, not SPR, which is stupid. Stupid is, stupid does. Real dumb. Nat gas. Eat bugs, Dan. We talked about it. Gap down, I got stopped out. Again, binary, sometimes that happens, but like the levels, people were puking it today. Okay, well, maybe it was waiting for this European price cap and Biden trying to buy off voters by getting the SPR. I'm telling you, it ain't going to work. Never does. You can't put a price cap on something that you need in everything. This isn't like, I don't know, staples. This is like oil and gas. Like, if you cap the price, demand ain't going to drop, and now you're going to have no supply because there's no reason for people to invest in buying or in drilling for more if they know that they're not going to get the market price. It's such bad economics. Somebody who will try to argue with me that oil and gas are not the future, so why invest in it? And it's like, well, guys, gals, whoever you are, you need a transition plan. When there's no transition plan, dangerous. Absolutely dangerous. You can't just turn off the oil spigot and go, oh, electricity. Turn on the light bulbs. No, you got to power this stuff. Obviously, everyone knows the answer. You need some sort of nuclear energy or some sort of higher energy efficiency grid. I hate talking about this stuff. ExxonMobil, high and tight. Somebody told me about shorting here, and I was like, please, for the love of God. And then it just went. I've said this 1,000 times. I think ExxonMobil makes a new high. If the market rallies, please do not be quick to short. Occidental. Buffett's probably like, come on, get back up into the 70s. I'll sell you some more calls. Same thing. EQT. Talked about you could buy it yesterday. Congrats if you did. The stock doesn't look weak. Consolidation. Got added to some mid-cap ETFs, S&Ps. Comes back and finds support. Imagine that at where the volume is. Didn't have the most exciting candle today, but it is what it is. I mean, it's very logical to see why oil and gas action did what? Pulled these names down. Not surprised. All right, you got any questions, thoughts, concerns? If not, I'm going to shut it down. I'm going to stop the recording at the moment. We'll keep it open for a second, see what people got. If you have any questions, this is the time to ask. Or if you just want to criticize me, the markets, you want to vent, because I think at some point, I had this conversation with Drew in the Discord room, and if he's listening, you have to stop being attached to the outcome. When I say that, it's like, Dan, your goal is meant to win. Yeah, I get it. But the problem is, every time you get in a trade and you think you're going to win, that's the problem. It's a probability-based game. It's not like you go to the casino and go, I'm going to play blackjack and I'm going to win every hand. Or I'm going to play poker and I get pocket aces. I can't lose. Or I'm going to bet on my sports team and I'm always going to be right. No, it's not how this works. It's absolutely not how this works. So if you get attached to the outcome before it happens, you're going to find yourself holding on to losers longer, right? Because you don't believe you can lose. I mean, this is why options are so dangerous to some people who just don't understand this, because they'll get in a trade and they'll go, well, it'll happen. And then it goes against them. They'll go, well, I'll just give it some time. And then they wipe out completely. They go zero. They got the fat donut. And so, for example, like nat gas, now you hope that the gap down or whatever, the breakdown after hours, and obviously if you were trading futures, you could get out. I'm gone. I'm just absolutely gone. And I go, you know what? Damn it. It happens. Damn. You're now like 500, maybe a little better last couple of weeks, but you've done well before. But what could I do differently? Trade less, maybe. Again, you can always go back and reevaluate your trading, but I think in a market that's volatile, as long as you try to identify the lowest, the least amount of potential loss if wrong, you're doing all you can. I mean, you can't get mad at it. You can't just get into this mindset where I can't lose. Everybody knows that I'm a genius. I can't be wrong. Just, you got to take that mindset. I think the best mindset actually for trading, and I say this all the time, are you trading well? I always ask myself, am I trading well? Are you doing things that you should be doing? But assume you're going to lose. Look for the evidence to confirm you're going to be right, and assume you're going to be wrong. If you can do that when you get into trades, it really helps you to not get caught in this mindset that, oh, I got into natural gas, and it's going to be the winner, and it's going to do this, and then it goes lower, and then you hold. I'm telling you guys and gals, you are going to give up your monster gains at some point if you do this kind of thinking. And it's probably, think about, you're lucky enough to not be long tech stocks, right? And you're not sitting here going, oh, I'm going to get my money back. No. Tech always goes up. No. Oh, I'm going to hold Netflix for 1,000. No. Oh, I'm going to get Meta back at 350. No. You get what I'm saying? It's no different whether you're trading or investing. That same mindset. Let the evidence point you in the direction. And sometimes that's the thing. We're trying to get in potentially at inflection points, right? So if you're looking at CF, for example, I mean, it's pretty clear. If you get below the 100-day in this mid-90s, it's game over. Adios, arrivederci, whatever. Keep it stuff, Yeah, I mean, you just don't dollar cost average. You try to get in at the best points, but you don't want to see lower lows, right? That means you're wrong. Oh, and again, I run into this every day when I talk about stocks, and they go, I mean, anyone here remember Intel? Told you, people keep going, oh, I'm buying Intel. Dan, hey, I'm buying Intel. Hey, Dan, I'm buying Intel. Hey, I'm going to buy Intel. I'm going to keep buying it. Hey, Dan, what do you think of Intel? I'm going to buy Intel. Well, yeah. You don't invest in losers. Exactly, Scott. We're not dollar cost averaging into losers. When you're wrong, you're gone. There's always better opportunities. Cash is a friend of yours. Because once you divorce yourself from, say, something like Intel, the world is your oyster. But once you marry this piece of crap, and you just say, you know what? I'm smarter than the market. I'm smarter I think it's going higher. I think it's going higher. I think dead. I mean, you're wiped out. I mean, whatever nut you had starting with, and say you had $100,000 and you put 75 of it into Intel, you lost 2/3 of your capital. I mean, so think about like options, just like leveraging it up. Goodbye. I mean, and this is why I always laugh at folks who like were getting on me. I'm like, you better not hold Meta for the long term. I mean, dollar cost averaging. I mean, sometimes like people are like, oh, but did that earnings you put in their worst case scenario? I'm like, no, my friend. Tech is a wreck. When it tops, it tops. I mean, you just got to go. Do you see why we look at commodities and go, all right, well, if they break below their net recent lows, then the whole market's probably going to get wiped out. But we like stocks that are what? Trending up, ideally. Like CF, does this look bearish? Now, if you put $100,000 into this stock, at any point, you got rewarded, other than if you bought at the very highs, which hopefully you didn't. Does this make sense? I mean, do we understand how everybody gets smoked at some point, and why I want to like just, I got to show this chart again, why I want people just to please, like, do not marry tech. Do not marry tech. Do not marry tech. Do not marry tech. And I'll just let it go after that. Where is this chart? Pump it. Pump it up. It shows you the cycles of commodities to, oh, did I miss it? Yeah. It talks about commodities to just overall market. And commodities get stuck in this, like, yeah, here you go. Super cycles, right? Right? And keep in mind, commodity to SPX. Yeah, Scott, so what happens a lot of the times during the down parts of the super cycles is that tech becomes such a large part of the S&P 500. And one of the reasons and things, the ways that I talk about birthing pains, right, is once these tech companies stop underperforming, where does the money flow? To the things that start performing. So that's why you get in these super cycles up. You get underweight commodities in the S&P 500 back to overweight. And keep in mind, this is what I love about commodities when they start moving. They are such a smaller market cap size potential to get inflated big. Think about if just a fraction of Apple money goes into an ETF that owns a basket of your favorite commodities. What if $1 billion goes into that ETF? And then maybe say the market cap is what? 10 billion. That money is going to get put to work to buy commodities. And it's just going to create like this never-ending bid. And that's where I think people don't realize, like, I love, you guys know I love showing this letter X, because this is one of my favorite charts, or it was one of my favorite trades. I mean, again, also I love the ag name. Too bad Potash got bought up by, I think, Agrium, and they combined. But look at this action from 2003 with U.S. Steel. $9 up to 200. Market cap exploded. Yeah, they go up faster. They go up. I mean, obviously there's down 4 or 5 months. But you didn't, and again, you'll know when it's the end. Remember we talk about straight line moves? Like, that is straight line move. This is just building and building and building and seasonal and years and years. I hope this makes sense. Why, I mean, again, I don't think you guys realize, like, I am literally building a mega list of commodities again. It's kind of interesting because, before I wrap it up, coal used to be one of the bigger ones. Like, a lot of the coal names. I mean, it's like Arch Coal and BTU and CNX. I mean, I feel like a lot of them went out of business or they restructured. I don't pay attention much to. I mean, again, I still don't really think coal will be the future in this one either. But man, commodity names. I'm telling you guys. I remember bought MCP, Molycorp. Anyone remember that one? The thing's a piece of junk. They went out of business. or they got their assets got bought up by somebody, I think. I mean, I remember we had calls on the stock. It was at like 13 to 17 bucks, and it ran up to 50 in no time. And imagine if you had cheap calls. You had bought calls for $2 or $3 that now are worth like 30, 40. It was pretty awesome. How do you know to sell the top of a straight line move? Well, Scott, you always take profits as you run higher, but think about, let me try to like wrap this up with this. In the phase of a bull market, right? There's like this, the first one, we don't know. And then this is real. And then, oh my God. Nope. And then it's, the candles that change it all. Remember we talked about like Tesla, like that last uber monster green candle that just made everybody think Tesla was always going higher. That's what you're going to start to like feel for. And also too, keep in mind, 2007, 2008, like you were going into a recession. So it'll probably culminate with a recession as well as, I don't know, some sort of just ultimate monster blow off. And this is what is going to be great about coming out of the bear market when commodities start going, is that you're not really going to have much downside. Like look at the initial off the lows, right? 9 up to 40 with real no pullback. And then you had your little straight line move. You got a little tired. Then you go from 26 up to 63. And then you pull back to support. We talk about points of control. Look at that thing. Man, so technical. Held that, and then it chops, and then goes zing. Yeah, you're still going to have to trade it. Or this is what I think this is great, if you have the capacity to put these in IRAs and certain accounts where you're just not going to trade it, just let that stuff go and sell. This is another topic. The printing press technique where you just sell covered calls. Think about think about what Buffett does. If anyone's still listening, this is what he would do. Is like when he has trending higher stocks and he knows they're overbought, he'll sell out of the money calls. So say U.S. Steel goes from 9 to 40, he would sell like the 45 or 50 calls, and it pulls back. And then, obviously, those calls go worthless. Then it goes on another super runner, and then he'll sell out of the money calls, and it pulls back. And you can play that weekly, monthly as well. If you think, and this is where it's going to get fun, is that you don't need to like trade 1,000 stocks. Just try to stick to the winners. But like, let me go look at, this is a great topic. And I apologize. If you got to go. I want to go back in time because Scott's asking some really good questions. And I think this is worth talking about. I'm just totally trashing all my trend lines. Where are we at? 1992. That's not it. No. Here we go. We talk about reoccurring like formations, right? Coming off the low. Scott, it's just you and I, maybe. I don't care. Right? You get, Scott, look at these days. Look at this. Look at this, man. Look at that. You could just let it ride. Then it gets choppy, which you expect, right? Choppy before the top. Here's your double top. Could you not identify a double top? Right? Pretty easy. And then it pulls back. Imagine, let me see if I drew this. This is just so fascinating. I love going back in time. All right, 0.382 to 0.5 should be expected. Yeah. Say you start rebuying down here. I'm trying to think if there's any. You had some like support resistance down here. I guarantee. Now, again, if we went and dug into this deeper, you probably find a reason to start buying here. You get this down red move, and like rubber band man theory's getting tired. Now you see the double bottom again. The W here, and then you could buy it, and it should start rising. As you get back up into the highs, it's probably going to get tired, backs off, chops out, and then boom, then it goes. And again, if you didn't even just waited, look, it broke out, and then you can wait for the breakout. Then it went higher, choppy, consolidation. Again, once it took out the high with volume, then it went higher, little straight line move. Now you get into, I think, 2005. I don't remember what was going on. But look at this. This is a monster pullback, right? Big. Well, now you get down to levels where it goes, oh, man, this is just brutal. I give up. And then you go back and you zoom out and you go, all right, you're just back in the chop zone. Consolidate, pops, you play it seasonally, right? Maybe September, October week, gets into October, boom, bottoms, starts rallying. Here you go. I mean, it's not going to always be that easy, but you just have to be like very thought conscious that it's in a bull market, right? And you're going to look for double bottoms. You're going to look for double tops. You're going to look for straight line moves of capitulation. Now, remember, notice like I like these small green candles when you rise on those. I like those days. When you start seeing the big greens, you got to be careful. Then that was the professional gap, game over. And then you could have taken your time. I mean, you may have thought that was the bottom. Yeah. Every stock's going to be different. You'll see. I mean, but this is the thing when, yeah, healthy, exactly. You're going to expect pullbacks. Like if you start looking at bull runs, you'll start looking at weekly, monthly, like certain materials. Remember, oil and gas are going to have certain seasonality. Certain materials are going to have seasonality, right? Maybe there becomes electric, vehicle seasonality that we're not even really thinking about. Just keep that in mind. Like, we'll figure it out. And this is the best thing is that you had stops, and this is what ultimately turns into, if you can like sit on some of this stuff, part of it, and then trade around it, you're going to do great. It's the people who, again, who just, again, they bought silver and they just, I got to get in it. No, when the super cycle starts, yeah, you're good. Silver super cycle, great. But until then, dead on arrival. And again, people are like, oh, you're going to be late. Would it really be late if somehow we bought at 20 and we know it's going to 100? I don't think so. You do not want to be early to this stuff. Because again, I think we talked about Fed needs to capitulate. They need to pivot. That's when the money is going to absolutely flow into this stuff. And it's going to be a freaking tidal wave. And maybe this is the thing. I'm hoping I'm wrong that we get the monster capitulation. Because maybe all it ends up being is what? A chop bottom. Like there becomes prices which silver just can't go below. Potentially, right? And if it is, it's temporary. Like maybe you're looking at the 16, 17 level. Like maybe that's what the floor is. So I hope this kind of stuff helps. These are the talks that I think get people understanding like more of what the potential is with commodities. Now and again, every name's going to act differently. There's going to be sectors and there's going to be times where we might rotate from ag names because ag will do well during certain types of the planting season. Like if you go into like spring, people start buying the ag stuff, right? They're going to start planting, right? Sell oil in May because of, runs up into Memorial Day. There's going to be recurring patterns, and there's not going to be this mindset of, oh, I need to go look at other sectors. It's like the last decade, and I wish I would have had more like thoughtfulness of this. What if you just stayed in tech the last 6 years and you just play Microsoft, Apple, Netflix, Google, Amazon, did I say that? Meta, Tesla. I mean, Tesla didn't really wake up till the end. But do you get what I'm saying? Like, if you can find the best names in those sectors, they'll present themselves. But imagine if you could just play those only during the last 5 years, right? Maybe it ends up being Rio, U.S. Steel, probably not. I don't know. Arrow. I mean, we'll find them. And they will act like badasses, and we will just play them. And you're not going to, and you know what I mean? You're going to have, like, your list of names that you're going to play is going to be so limited to, here, let me see if I can pull this in there. I'm building this list. Again, this is the stuff I get excited about. Get in there. Maybe it's gold. Maybe it's silver. Maybe it's royalty miners. Maybe it's commodities. Maybe it's agriculture. Maybe it's uranium. Maybe it's lithium. Maybe it's oil and gas. Maybe it's solar. Maybe it's industrial specialty chemicals. Again, this list is going to continue to grow. And these names then will start to narrow out. And this is the thing. I mean, you will see in a bull market how the leadership narrows. And then people, they start believing Apple, Microsoft, Google, Netflix are safe, right? Then it gets nuts because maybe it ends up being what? Like, I mean, I think what last cycle, if I remember correctly, BHP was one of them. Where are you at, my friend? Man, I'm just jumping around, but whatever. If you guys got to go, you got to go. BHP, yeah, was a big one, right? Like this thing just was like it was an absolute beast. I mean, there was barely any pullbacks. I mean, it was just go 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 go. Freeport McMoran, where are you, Freeport? There were no pullbacks in Freeport. Beasting, pulled back. I mean, I guess, but choppy slop, zing, straight line move, double top. So many repeating patterns. Look at that. Dropped in 2009, came right back. I mean, this is because people love this stuff. I mean, Freeport with gold, oil and gas, tons of stuff. Sorry, I'm just kind of getting excited looking at this stuff because it just boggles my mind. Rio is another one. No pullback. Hot. Running hot. Let me see the other ones. I mean, Cleveland Cliff. Where did I remember they? Yeah, they didn't really pull. Yeah, this thing went just absolute bonkers. I don't like their balance sheet now, unfortunately. Alcoa. Y'all remember the old Alcoa? I remember they were struggling because of supply issues. And then they restructured. Look at that. Ugh, junk. Who else? I mean, if you looked at the MU ETF, it was pretty strong. Didn't come out till later, but yeah, I'm trying to remember some of these names. If you look at, I mean, CF was definitely around then. I just don't think it had the, yeah, it didn't have like the market exposure, but look at that. Was there really any pullback? I mean, keep in mind this split many times, but $2 up to $4.34. All right, I'm going to go. I appreciate y'all. Appreciate love, support, donations. I mean, seeing some people talking about made 58 grand trading on our insights. That's solid. Again, but don't compare yourself to others. Like, it's a process of learning. Like, you're not ready for the big time until you get there. And you don't want, I always tell this, like, the worst thing is beginner's luck. You make a bunch of money and you think you're good. Because then what happens? You lose it all. You got to, like, earn it. You know, you got to, like, make it through the minor league. You got to get up to the major league. You got to do it. You got to just earn your way up. And you'll get pay raises along the way. Just don't be like me when you think don't turn into a flame out. Like, that's what happened to me. I mean, I thought I knew everything. I didn't learn my lessons. And guess what? The lessons had to be learned again. Don't swing at a curveball off the plate. You know what I mean? Like, just whatever it is. Like, you got to do that. So this is a process of building back for everybody, ultimately. I appreciate the journey going with y'all. All right. Talk to you later. Peace.